Hello everyone. Riocan just cut their distributions by 33%, which is unfortunate. Not surprising, but super disappointing. Because this is an end of an era of Riocan paying out distributions like forever, even through the financial crisis. So what does this all mean? Today's video, I'm going to cover the latest news with Riocan announcing a 33% distribution cut. And what does this mean for the future of Riocan? I'm going to cover also the potential red flags I'm seeing in this company. I'm also going to cover some basic technical analysis and give you my thoughts on what the stock price can do in the near term and in the long term. So if you are an investor in Riocan like I am, holding on to positions and wondering what to do, or you're looking at Riocan as a potential recovery play, then you got to check out today's video. So Riocan has cut their distribution by 33%. Now Edward Sunshine had implied that distribution was absolutely safe, but of course, given the exceptional circumstances, not super surprising that this actually happened, especially when Justin Trudeau announced that we're not going to all be vaccinated until September of 2021. Now, because of that, Edward Sunshine realizes that there's a lot of uncertainty until that time. So they're playing it safe and they're cutting their distribution, even though the payout ratio is less than 86%. But I think what this really means is that there's going to be some volatility in the rental collection. Okay, what are the potential red flags? Okay, I already told you that Justin Trudeau said we're not going to get vaccinated until September 2021. So there's going to be many more months of uncertainty for Riocan, given that they're in a high risk space for real estate, which is the commercial retail sector. So it's going to be a bit tricky collecting all the rent if your tenants can't even make any revenue. So, tenants like Hudson Bay, Hudson Bay, if you haven't seen all over the news, hasn't been paying rent, and I think they're getting evicted. So I would say that Hudson Bay is one of their tenants. And that's just one of the many risky tenants that Riocan has, which is Hudson Bay. We've got the movie theaters, we've got the gyms. We've also got these smaller retail stores and small businesses. Now, of course, Riocan's already made provisions for these types of losses. I think it was around between 8 and 9% provisions in there. Basically, they budgeted for potential rental losses. But I think that Edward Sunshine has made a smart move by cutting the distribution, getting a lot more cash into the company. So they have $150 million more, so they can make some, whatever they need to do to survive until September 2021. And given the crazy uncertainty, I think this is a very smart play. Now, keep in mind, even though I mentioned gyms and I mentioned the smaller retail, the small businesses, I mentioned Hudson Bay, each of these tenants don't make up more than 1% of the tenant profile in Riocan. So Riocan is still very diversified. I think the majority of their tenants are essential needs tenants, so meaning they actually will pay their rent. We've already seen BC, Manitoba, and Alberta face little spurts of lockdowns, and that it's not going to be surprising if this continues on, because we're not going to get all vaccinated till September 2021. So in terms of Riocan stock, what does this all mean? I'm going to do some basic technical analysis. Now, this is going to be a little bit different from all my other videos because I normally never do technical analysis, but I've already covered a lot on Riocan in my videos up here, so check it out up here. So I think it's a bit more insightful if I give you my perspective on what I see in terms of the stock price behaving over the next few months up until a vaccine comes into play in September 2021. So let's jump into that right now. Riocan has actually been trading at all-time highs before mid-March around, $27. Obviously, after mid-March, because of the exceptional circumstances, it just plummeted. Riocan has been trading pretty predictably between $14 and $18, and $18 probably being its ultimate high. Now, Justin Trudeau has publicly announced September 2021. We also got the government subsidy only here until June 2021. And given the uncertainty that, different provinces might play a bit of a yo-yo in terms of lockdowns, because again, we're not getting vaccinated for a while, and we don't know where all the big surges in COVID cases, they just come up pretty sporadically across Canada. So all to say is just a ton of uncertainty. So what I'm trying to get at is the stock price is probably going to trade pretty range bound, bouncing up and down between, $14 to $18. Now, this is probably going to happen all the way up until September, and then we're probably going to face a bit of a pop because we're going to be vaccinated. Everything's going to go back to normal. Of course, the reason why you're watching this video and been following Financial Nirvana Mama and been subscribing and of course liking this video is because you are a long-term investor. And the reason why I actually made an investment in Riocan, which takes up I think around 4 to 5% of my entire portfolio, is because this is one of the recovery stocks that I've been investing in. I would say let's look at the long-term upside. Okay, so let's just get past the months that are going to come up. Let's look at like a year from now. Let's look at like 2 years from now when things get back to normal, when people go shopping, and the fact that Riocan has been injecting a ton of money into diversifying their portfolio, moving away from the dead end sector, which is the retail space, and into residential real estate. So if you were to say that you believe Riocan can turn it around and get people back to full shopping and have strong management and be able to really strengthen their position in the residential real estate, then there's some potential big upside to Riocan. You can see that before mid-March, Riocan was already trading at $27. And this is even before the residential real estate actually had a lot of income coming in. So I think that in a couple years, when they're more and more of their portfolio diversifies into residential real estate, we're going to see a big change in their rental income, and you're going to see less emphasis on the retail space. So all to say is that I see actually quite a bit of a big upside versus the downside. I'm looking at an upside up to $24, $25 in the near term, and in the long term, 27 plus. So that's like at least 40% upside within, a year or two. Like probably 2 years, 3 years, we're going to see even more than 40% upside. And of course, the downside just for sitting there is that it could drop, 10, 15, up to 20% if you think it could trade all the way down to $14, which I don't think is likely anymore, because that was like a super scared market when the shutdowns were just happening. And while you're waiting, at least Riocan is still paying you some income as you patiently wait for this company to really turn back around, and really just wait until the whole Canada turns back around. Of course, if you are an income investor and been relying Riocan for repeatable, predictable distributions, I would say that there's probably better other REITs out there. We've got Canadian Tire REIT is one great example. They've got a yield around 5.6%. Their one and only tenant is Canadian Tire, and obviously they've been collecting like 99.9%, I think, of their rent. So I would say if you're truly looking at Riocan before as an income play, like you were relying on their distributions, then I would say, Riocan's way too risky, and there's way better REITs out there if you want a predictable distribution, because it's going to be not so great in the upcoming months up until this vaccine comes into play. So, but if you are a long-term investor, 2 to 3 to 5 years out, and just collecting a bit of distribution now, just so that you can, at least you're getting paid while you wait, and see a lot of upside with Riocan, then like me, then you probably want to hold on to your positions. Okay, I'm going to give you my closing thoughts on Riocan and what am I going to do with my positions. Okay, so I know some of you guys have been heavily investing in Riocan. In fact, sometimes making up 100% of your portfolio, which is like, okay, you probably want to diversify, maybe a bit more than just REITs, because there's a lot of stocks out there, a lot of great, amazing, even way lower risk stocks. So check out my other videos on tech growth stocks up here. Okay, but anyways, that's besides the point. I'm saying is that if you have all your money tied up into stocks, and including Riocan REIT, I would say, there's always potential opportunity that could come up any day. And I would say, I always recommend that you always have some dry powder set aside, meaning cash set aside. So if you are in a position where your 100% of your cash is in equities, or majority of cash is in equities, I would say maybe start looking at trimming back maybe some of your positions in Riocan, just so that you have some dry powder, some cash on the side. I would say, I always recommend between 10 to 20% in cash, so that you can dump money into opportunity play. Number 2 is that if you need the dividend, you really need that distribution to pay your basic needs like groceries, well, I would say Riocan is not a great distribution REIT to hang on to, because although I would say Edward Sunshine is a great leader, he's got great management, and he's made, I think, a very smart position in cutting out its distribution, because even though its payout ratio was like 86%, which is actually pretty safe, he trimmed it back 33% even more, which makes it around, I think, 70-ish, in the 70-ish range. And I can't remember, but it makes it super safe. But that doesn't mean he couldn't potentially cut the distribution again, because obviously we have no idea what it's going to be like up until September 2021. So even though he has $150 million worth of cash, and of course he has like $8 billion worth of real estate, and he has a ton of liquidity in a secured line of credit, he has a lot of cash to play. But I'm just being ultra conservative. He could cut distributions. I'm not saying that he is, but he could. I mean, we just don't have a magic ball. We can't tell what the future is going to be like leading up to September 2021 for the vaccine. What if it becomes later, for example? But of course, I'm just someone on YouTube talking about stocks and talking about investing. So please make your best decision based on your own due diligence. If you are like me, who's a long-term investor, this leads me to number 3, a long-term investor who's really actually behind Riocan, because as a big recovery play, meaning not only do you see the distribution just as a plus for holding on to the REIT, and 2, that you see that there is going to be a lot of upside over the next year to 3 years, and the fact that you are actually made a lot of purchases in Riocan after mid-March, so your probably dollar cost average is obviously well below 18, then you're already on the up. Like, you've already made your money and you made some income through the distribution. So for me, I'm in that position. I think my dollar cost average is around like $15.50, like $15.50 per share, and I own quite a bit of shares, like I don't even remember, but I mean, I own enough that it takes up like now 4 to 5% of my entire portfolio. So all to say is that for me, I'm actually wanting to get some dry powder back in my TFSA. And so I'm going to be trimming a bit of my positions, only because I actually just want cash sitting in my TFSA. I can't contribute any more this year. I know I could contribute more next year, but I just don't know what the weeks are going to be like for the rest of December. And actually in December, there's a bit of a, at least in my like many years of investing in stocks, there's always a bit of volatility in December. So I just want to have some dry powder sitting aside in my TFSA. But the huge majority of my positions are going to still be there. And so I'm really going to be sitting here and waiting until the stock recovers in 1 to 2 years and 3 years time, because I really believe there's a lot of upside to Riocan, and the 5.6% yield at least gives me a bit of distribution back as I wait patiently for the stock to come back. Hope you found this video super informative and gave you insights on what this stock can do. Again, I am just someone on YouTube who loves talking about stocks and investing to help you build your best life. Anyways, if you have been watching this video and haven't subscribed, why not? Hit the subscribe button and that bell notification button so you get the latest and greatest videos coming to you. I'll see you in the next video.